Hey everybody, Loren with Sound Planning Group here and Joe Maas, your Chief Investment Officer. Wanted to put together this video. It is Sunday, February 2nd, and just give you our thoughts around the tariff discussion. Over the weekend, Joe and I have been connecting, talking, and looking at what's going on in the markets and wanted to put together this educational video and let you know what we're thinking, what we're seeing, what we're doing, what you should be doing, what you should be thinking. As always, if you have any questions, concerns, thoughts, feel free to reach out. We are always here to help. Joe, good seeing you, my friend.
Good to be Steve, Loren. Especially for everyone that doesn't know, my family have been down sick with the flu and sinus infections for a week. So it feels really good to be talking to real people about real lives. So yeah.
We love it. Well, I'm so glad you're on the mend. So, Joe, maybe just kind of give us a thought. We had the Trump administration announce the tariffs here. Looks like 25% on Mexico, 25% on Canada, with the exception of some energy. It's going to be 10%, and then 10% for China. And then we saw recently Canada coming out and saying, hey, in retaliation, we're going to put these tariffs on. And I think Mexico tomorrow, Monday, is going to announce some as well. But can you just kind of give everybody watching this video a thought on what is a tariff? Why are we doing it? What are the pros, the cons, and maybe just kind of get us up to speed on what a tariff actually is?
Yeah. We wrote about this a couple of weeks ago, or maybe a month ago. So hopefully everyone has seen that article. It was more extensive, and I really encourage you to read that for more of an extensive view on tariffs. Really, what I want to do today is address what we're going to do about them in the portfolios. And so I'm going to spend some time on that in a minute. A tariff is just a form of tax on imported goods and services, right? And it is really that basic. It can be a specific tax or ad valorem tax, on everything. It can be put on an industry, a sector, a country. And so as you heard Loren say, there's Mexico and Canada are affected the most. And China, excuse me, still fighting a little bit of this. China is in there for a little bit as well, for good measure. Now, they're usually they're to protect domestic producers, right, and domestic consumers, and so they're usually a protection mechanism by the country. And U.S. is taken advantage of all over the world. I mean, we are the largest economy in the world, and so people love to import all their goods and services to us. And sometimes we do get the raw end of a stick, but whether the tariff is the right way to go about it, that's a political debate. That's beyond my comprehension. So I'm not really going to get into the politics of it. But it is a tax. It is designed to protect the local countries, producers and consumers, and is really there to preserve national security, right? And to protect the little guy, the little industry. So it is supposed to be a good thing for the U.S. It's not supposed to be a bad thing. Why can it be a bad thing? Well, because people shoot back with tariffs and they can become inflationary. And so they do have their repercussions. So what we're doing about that is this is a normal rebalance month for us. So luckily, the tariffs came at a perfect time. And each one of the portfolios will be rebalanced per the mandate. And we will go through our normal process. So the tariffs aren't going to change the way we think about things or the way we approach things because we're not reactionary, right? We are running institutional professional processes and managing money professionally. We're not letting the emotions or the event headlines of any given day drive our process. We're much more mature and refined and anchored in our ways than that. So it will be worked into the process. And because most of the portfolios that we run are stock up, company by company, excuse me, Lord, we'll be able to look at the sector and make an intelligent decision about the effect of that sector and that company within that sector. So obviously, we'll probably be trying to avoid uncertainty with companies around the countries affected by these tariffs. The EU's been mentioned. It's kind of taken a wait and see. We haven't attacked them yet with tariffs, but we'll see. So Canada and Mexico and China will be looking at those companies within those countries, and we'll make a company by company decision whether we should, buy, hold, or sell them. Okay, so
I think that's a great point, Joe, in the sense that some of these tariff discussions and really any, economic shifting, it's going to impact some sectors and some businesses more than others. An increase on a tariff on Mexico and Canada, there's going to be winners and losers in that. And it's really incumbent upon us to not be too, like you said, reactionary to a headline, but also just doing the work, doing the analysis to determine how is this change, whether significant or insignificant, going to factor into our selection process of the different positions.
And,
And
and there are, yeah, continue. You're right on. You're right on.
well, and I think too, right now, Joe, we've got a new administration. There's so many different things. We have kind of thought that the tariff discussion was going to kind of go in this direction. It's just difficult to know exactly when that's going to happen. What are the numbers going to look like? And then what is the outcome? What's the effect going to be? And that's really what we're talking about today is as we're rebalancing the portfolios in February, we're taking all this information into account.
Right. Yeah. And a lot of it we don't know. I mean, we can't predict the future any better than anybody else, unfortunately, but we can look historically and into the last tariffs, I think the estimates that might negatively affect GDP, by 1.2%, and maybe add around 0.7% to core PCE, which is the Fed's favorite measure of inflation. So, it's looking to be less than 1% added addition to inflation. Inflation's about 3 right now. So, if you added 4, it's still half of what it was, coming from COVID. So it's not, and not all inflation is bad because sometimes, we can find companies that are going to benefit from that. And the dollar is going to benefit from that, at least short term, because that'll probably mean that the Fed doesn't raise or drop rates, right? If they keep rates high, that attracts money to the U.S. And so that'll keep a strong dollar. I know Trump said the dollar is too strong. There is a debate on a policy matter, whether you want a strong dollar or a weak dollar. A weak dollar means, it helps other people. Strong dollar helps us. So all these macro factors will be taken into effect, but really we're going to be looking at our same process, bottom up, continuing to do the job that we've done. Again, I've been doing this for 30 years. And so I'm not really worried about the tariffs because they're going to come and go, and the markets are going to go up and down. And 5 years from now, I'm not going to remember Sunday afternoon when Trump announced a 25% tariff and everyone shot back. It probably is not going to last that long. Trump does not want to have a bad economy, right? He doesn't want to have high inflation. He really loves Americans, all Americans, and wants everyone to do well. That's why he's doing these tariffs. I mean, that's the case for these tariffs. His case for the tariffs is to protect the American people and the American industry. Okay, so the tariffs aren't against you, right? A president or a nation doesn't, or at least our country, doesn't impose tariffs to hurt its own people, right? That doesn't get votes. And so that's not the purpose of a tariff. That might be the collateral damage sometimes. But again, the current administration is going to want to hopefully set up another administration for the future, even though they're a one-term president right now. So they're going to still want to leave, the country better than they found it. So I don't expect that this is going to last for years and really be a long-term strategic and detrimental factor. And if it is, the CEOs are smart people running these large companies, and they will adjust and they will live with it. And, you got to remember that the rest of the world has been using tariffs against us all over the world for years. And so you just don't realize it because it's not a domestic, issue in our news. But the rest of the world loves to do this to us. And we've lived with it for many, many years. And of course, the markets have survived. So we will survive.
Well, another thing too, Joe, that I was going to mention is that, there's a lot of economists that think that the tariff strategy that Trump is using makes a lot of sense. And there's a lot of economists that think it's not really the right way to go. And our position is whether it's the right thing to do or not the right thing to do, we have to react with the realities that we have, right? We're dealt the cards that we have, and it's our job to navigate those. So, are some of the policy changes that he's implementing, are they the right thing? Who knows? Are they the wrong thing? we're just gonna navigate the best we can. And I will say too, coming through an election, where everything is so supercharged, it's like we are really sensitive to the fact that discussion points, right, and talking points, they impact some others, some more than others. Many of you watching this video think that this Trump administration, with some of the tariff things that they're doing, they should do more. They should be more hardline, and it's the right thing to do. And some of you, that's not your position, and we get that, right? And that's why when we look at portfolio construction, when we look at planning construction, we're always looking to do, how do we complement what's important to you with your finances and your plan with your portfolios? But to Joe's point, we are not going to make decisions based on emotion, based on a headline. We're going to do the work. Every time we look at these portfolios, we're going to look at, find what are the positions, what are the stocks, what are the funds that are going to make the most sense given this current economic environment moving forward. The other thing I was going to say, Joe, is, we've had 2 great years. The market's done really well. There's been a lot of different, turmoil economically, but we've coming off 2 really strong years. It would be expected, as we've been talking about, to have some volatility, right? It would be expected to see some pullback. And this is just kind of a little bit of what we're seeing so far this year, is a lot of the chatter on policy, how it's actually going to get implemented. What's the cabinet going to end up looking like? A lot of these things, these headlines are creating volatility, and it's our job to navigate them and not be too reactionary.
Yeah, let me add a couple more things. One thing I forgot to mention in the beginning when you asked me what a tariff is, and I told you this, usually a tax, which is true. It's also right now believed to be a negotiating tactic because Trump really is trying to get the southern border under control for 2 things: the illegal immigration and the importation of fentanyl, right, which is killing millions of Americans. And so it's a national security interest, right? He's doing this not as an economic punishment because he's losing the economic gain. Those are two areas that he's really paying attention to. Is the fentanyl coming in, and then the illegal immigration, and again the illegal immigration coming in from Canada as well. And so those are 2 other factors that I'm sure that the administrations will get together and they will solve this problem. Mexico doesn't want to have a fentanyl problem as well, and they don't want it going anywhere. So we just don't know all the pieces on the chessboard behind the scenes. But again, tariffs are generally for taxes, and right now there are probably also pawns in negotiation to get what the administration wants when it comes to keeping drugs off the streets and some other factors. So,
yeah.
And then the last thing, and I'll probably beat you to the punch, Loren, and then I'll let you expand on it. But because there is volatility and there's uncertainty, we're going to make the best decisions we can. But remember, the best thing that we can do is communicate, and the best thing you can do is communicate back. And so that's why your CPR plan, right? You have your cash, you have your protection, you have your money that's supposed to be at risk. You get that balance correct. And again, as we always talk about here, the best plan is to have those allocations based on what's important for you and your family. Some people might want to still be 100% risk on and use this as a buying opportunity, while other people say, my gosh, that's crazy. I want to go to cash and gold and silver and crypto and just hunker down. The world's coming to an end. And that's okay too for that person. And then there might be somebody in the middle. And so it's fine. It's all okay. We just need to follow your plan. So you want to touch on that a little bit more, Loren, because that's really the portfolios are going to go up and down, or volatility will come in and out, but it's really the core planning that really protects everyone in this situation.
Yeah, I think that's one of the things we talk about all the time is, we want to have your parachute before you need it. And we don't view this tariff discussion as a parachute moment, where everything's going to, cave in and crash. But we don't really necessarily know when those things are going to happen before they happen, right? And so what we're trying to do is we're always trying to position you in the best place before we get into some economic issues. And that's where the cash protection and risk allocation, it really helps us be able to sleep at night. Right. That's why tariff discussions like this or different economic discussions, we're good, because we know that our clients have a really solid plan that's going to be able to do well in good economic times and bad economic times. And communication, engagement, listening on both sides really is what leads to the good client outcomes. I'll say one thing, Joe, before we wrap up and let you get back to the Dayquil and taking care of yourself. Um,
Dayquil
we
and futures, they go together. So, yeah.
Dayquil and futures, yeah. Um, we do have our quarterly state of the market events coming up here later in February. And so, this is just a nice opportunity to extend an invitation if you want to come hear what's going on in the economy a little bit more in detail in a live event with Joe Maas and myself. We've got a couple events coming up on the 25th of February and the 27th of February. So you can click the link below and get registered. But it really is always about, doesn't matter what's going on, whether it's COVID, whether it's an election, whether it's, different tax changes and such. It really is just about communicating. And that's why we like to put together these videos when we think there's newsworthy information to share. Because that's ultimately what leads to confidence and comfort in planning, is for people to know what's going on. And so hopefully you found this video encouraging, educational. Just wanted you to, again, to see our faces, hear what we're thinking, what we're doing, what we're looking at. You'll see some changes in your Schwab portfolios in February, not specifically due to the tariff discussion. It just is a quarterly rebalance. And so this tariff discussion we will definitely take into account as we do all other factors. Just continue to connect moving forward. Anything else, Joe, you want to share before we wrap up?
Yep, you did a great job, Loren. Just to reiterate, yeah, we didn't want you to see trades and think, oh my gosh, they're trading because of the tariffs. Normal trading month, they will be considered, but we're not trading specifically because of the tariffs or retaliation or trade wars. It's a macro factor that we take seriously and we will incorporate, but we just wanted to let you know so you don't start seeing trades. And of course, that's will lead a lot of questions. Why are you trading? Why are you trading? What's going on? And so we just wanted to be ahead of the curve for you and let you know what we're thinking. So we're here for you. Give us a call. We'll talk to you soon.
Yeah. As Joe mentioned, if you ever have any questions, concerns, want to connect, feel free to reach out. We are not a meet once a year type of firm. We're always here to connect and listen, and communication engagement is really important to us. So hope you have a great rest of your weekend. I guess you'll probably be getting this video early in the week. Hope you have a great week, and we will talk to you soon and hopefully see you at the State of the Market event. Have a good day.